Good evening, everyone. Welcome to the channel. Before I begin, here are my disclaimers. Today I am going to give you an update about Yixin Group Limited annual report. Yixin Group Limited offers a diverse range of businesses and services through its online automobile finance platform in China. At the core of its operations are two primary segments: the transaction platform business and the self-operated financing business. The transaction platform business provides various services to its partners, including auto loans to consumers, guarantee and loan facilitation, aftermarket services, software-as-a-service solutions, and advertising for automakers, dealers, finance partners, and insurance companies. This segment is a key component of Yixin Group's operations, facilitating transactions between multiple stakeholders in the automotive industry. In addition to its transaction platform business, Yixin Group also operates a self-operated financing business that offers consumers auto finance solutions through financing leases. This segment provides self-operated services such as operating leasing, automobile sales, and other related activities. Furthermore, the company is involved in information technology development, recycling of renewable resources, and provision of commercial factoring, transaction, leasing, and subscription services. Overall, Yixin Group Limited's business scope encompasses a wide range of services, from online auto finance transactions to software solutions, advertising, and various value-added services for its partners. Yixin Group Limited market capitalization of 15 billion is significantly larger than the average industry peer of roughly 1 billion. This shows that Yixin Group Limited holds a significant advantage in their industry. Yixin Group Limited trades at a higher price-to-earnings ratio of 11 times and a higher price-to-book ratio of 0.76 times relative within the industry. This shows that investors are pessimistic in the industry in general, and we should dive deeper on the reason. Additionally, the stock appears attractively priced, even though it is trading at a higher price to value than it peers. We will need to evaluate if the business earnings is sustainable and if the assets are valuated rationally. Overall, we need to identify if this makes a good investment on the long term, or is it going to be an extended period of low valuation or a value trap. The leverage on the balance sheet appears elevated, with liabilities of 69% of total assets. This raises some concern, and we should examine the industry and nature of the business to determine whether they justify the elevated leverage. Liabilities have grown faster than assets and equity, which is somewhat concerning. However, asset growth remains positive, suggesting management may be temporarily leveraging liabilities to fund expansion. Shareholder equity has expanded consistently over the past 5 years, with growth supported by rising operating income. This suggests the company is profitable and financially sustainable. The share count has increased over the past 5 years, while revenue has continued to grow. This suggests the business may rely on shareholder dilution to fund expansion. Investors should closely monitor whether growth can eventually be sustained without dilution. The company have a dividend yield of 4.61%. The income statement shows that the company have been growing its revenue annually and the operating income have been increasing. This shows that the business model works and the business is expanding. The primary drivers of revenue growth or decline can be identified through an analysis of various factors. On the growth side, several key drivers have contributed to the increase in revenue. Firstly, the total financing amount has increased by 8.7% year-on-year, with financing transactions growing by 16.2% year-on-year. The used car financing market has also continued to expand. Another significant driver of revenue growth is the fintech business, which has seen a surge in revenue of 150% year-on-year. This growth can be attributed to the increase in financing amount facilitated through the fintech platform by 91.1% year-on-year. Additionally, consumption and trade sectors have also contributed to the growth, with total retail sales increasing by 3.7% year-on-year. Furthermore, the automotive industry has experienced growth due to policy support, resurgent demand, and technological advancements. New vehicle sales have increased by 9.2% year-on-year, while NEV sales have grown by 17.5% year-on-year. The used car market has also shown resilience, driven by trade-in initiatives and accelerated circulation of existing vehicles. On the other hand, there are several drivers that have contributed to revenue decline. One key factor is the decrease in loan facilitation services, which declined by 41% year-over-year. This can be attributed to a strategic shift toward SaaS offerings. Additionally, the advertising framework agreement with Beijing Baitauto Interactive led to a revenue decline of -75%. The company's reliance on top customers has also decreased, with the top 5 customers accounting for 38% of total revenue, down from 44% in 2024. Net income experienced mixed changes across different segments. In new passenger vehicle sales, net income increased by 9.2% year-on-year, indicating a positive trend. However, in the used car market transactions, it remained broadly stable with only a 0.4% increase. On a company-wide level, net income decreased by RMB 122 million, or 15%, from 2023 to 2024. Profit margins also underwent significant changes. The used car market was affected by intensified competition and price fluctuations, leading to a decrease in profit margins. However, the group benefited from favorable conditions for product innovation and capturing market share due to shifting competitive landscapes and evolving regulation environments. As a result, profit margins increased from 47% in 2024 to 56% in 2025. The increase in net income in new passenger vehicle sales can be attributed to various factors, including the group's ability to innovate and capture market share. The decrease in net income on a company-wide level may be due to increased provision for impairment losses and material adverse impacts on the group's financial position. The company's financial performance indicates a significant milestone. According to the provided information, the company has successfully achieved a positive operating cash flow. This is a crucial indicator of a company's ability to generate sufficient funds from its core operations to meet its financial obligations. A review of page 34 and page 144 confirms this assertion, providing further evidence of the company's financial stability. The generation of positive operating cash flow suggests that the company has effectively managed its expenses and revenue streams, enabling it to maintain a healthy financial position. This achievement is a testament to the company's operational efficiency and financial management capabilities. The company's debt level has undergone significant changes over the past year. The total debt level increased from RMB 26,948,957 in 2024 to RMB 31,279,599 in 2025, marking a substantial rise of 16%. Furthermore, the total debt has also seen an increase from RMB 775,820,000 to RMB 960,349,000. This represents a notable jump of 32.6% in just 1 year. In terms of interest expenses, there have been significant changes as well. Interest expenses increased by 96% from RMB 28 million to RMB 55 million, indicating a substantial rise in the company's financial obligations. Additionally, finance expenses, which include interest expenses, saw an increase from RMB 100,025 to RMB 128,168. This suggests that the company is shouldering higher costs due to its increased borrowings. Overall, it appears that both debt levels and interest expenses have seen significant increases over the past year, indicating a notable shift in the company's financial landscape. The performance of the company's business segments varied significantly in the recent period. The transaction platform business was a standout performer, generating substantial revenues and profits. With revenues of RMB 9,291,380, gross profit of RMB 5,190,602, and operating profit of RMB 1,653,031, this segment demonstrated its ability to drive growth and profitability. On the other hand, the self-operated financing business struggled to make a significant impact. Despite generating some revenue, the segment's performance was lackluster, with revenues of RMB 2,268,568, gross profit of RMB 1,270,869, and operating loss of RMB 45,956. This suggests that the company needs to reassess its strategy for this business segment to improve its overall performance. Management is optimistic about the company's outlook, citing stable performance in the Chinese automotive industry. They plan to capture market share through product innovation, driven by favorable trends such as NEV growth and regulatory changes. The company will accelerate its overseas expansion, focusing on Southeast Asia with a dual-track approach of driving growth in established markets while expanding into new countries. This expansion is expected to drive growth in research and development expenses and administrative costs due to increased investment in AI-driven operations and global expansion. To maintain financial stability, the company will continue to optimize its debt structure, diversify funding sources, and reduce financing costs through innovative financing initiatives. Management also expects to expand overseas with established operations in Singapore and Malaysia. Furthermore, the company is strengthening its competitive position by optimizing its sales center operating model and investing in AI technologies. This includes a strategic partnership with Yixin, where the company will provide cooperation services for 20 years and refrain from competing businesses during predetermined terms. The company's financial activities have been quite active in recent times. One notable aspect is the payment of dividends to its shareholders. The company has indeed paid out dividends on multiple occasions, as confirmed by various pages within the document. In addition to dividend payments, the company has also engaged in share buybacks. Specifically, it is mentioned that 341,217,576 first award shares were repurchased through a share buyback program. This indicates that the company has been actively managing its capital structure and shareholder equity. That concludes the financial summary for Yixin Group Limited. Feel free to comment below, and I will be happy to answer them when possible.